Good morning, dears, and welcome to Super Coaching for UPSC by Textbook. And I am Pradeep, your economy mentor. And today we meet here to discuss one of the very important topic of Indian economy, that is IMF. And IMF refers to International Monetary Fund. So today we meet here to discuss international institutions, and first among them is International Monetary Fund. So let's start our today's session. So let me tell you that in what regard we are going to proceed uh, with respect to this session. So when we talk about that means, first of all I will discuss the introduction. In that introduction we will talk about certain facts about the IMF. Then we will discuss the organizational structure of IMF. Then we will discuss the objectives of IMF. Then we will discuss the functions of IMF. Then we will discuss India and IMF. Then after that we will discuss the SDR, special drawing right, and how it functions. So that means we are going to discuss all these things in regard to today's session. So let's start our today's session. So when we talk about what is the meaning of IMF, or what are the, that means IMF and the World Bank is considered to be Britain board twins. What is the meaning of that? The meaning is that IMF and World Bank was established in 1944, and that a conference was conducted in Britain board. In Britain board, Hampshire, in USA. And in that that means after the Second World War there was that means devastating effect of Second World War. So there was need to reconstruct the war ravaged country. Okay, that means those countries which was being affected by the war, they were need to be reconstructed. So there was a need was felt for international financial institutions or international institutions. That's why that conference was conducted in 1944 in Britain board, and in that conference that means world community at large, okay, world community at large to decided to that establish two international institutions, and one of them was IMF and other was World Bank. That's why World Bank and IMF is considered to be Britain board twins, because they were established, that means decision was taken in the conference which was conducted at Britain board, Hampshire, okay, USA. So this was the, that means and why it was established, that means it was thought to establish just to have the it was thought to establish just to have reconstruct the war ravaged country. Okay, so that was the basic. Okay, and that means in that conference only that world community at large, in that conference only world community at large good morning Ajit. World community at large should to establish international financial institutions which can avoid the competitive that means devaluation of currency, because of competitive devaluation of currency there was a great depression in 1930. There was great depression in the world economy. So in that that conference that was conducted or held at Britain board, it was that means that conference want to suit up institution that can take care of this type of competitive devaluation of currency, because this competitive devaluation of currency only there was that there was Great Depression of 1930. So just to avoid the Great Depression further, just to have the devaluation of currency, competitive devaluation of currency, just to can be avoided. That's why one institution was sued to raise, and that was none other than IMF. Okay, and second thing was they were being raised for that means re-stabilizing the war-raised countries. So this is about the that means background about the IMF. Now we are going to focus that what are the about the facts of IMF. That means it was, as I said, that it was in 1944. It was after the Great Depression, and I discussed it. That means there was the Great Depression in world took place because of the competitive devaluation of their currency. And just to avoid this type of situation further in future, that a need was felt to take care of this type of competitive devaluation, and that's why the world community at large and Bretton Woods Conference thought about to raise an institution that is known as IMF. Okay, so now there are 190 countries. There are 190 countries. IMF, there are 190 countries. Okay, and the latest one is anyone in the comment section? What is the name of the latest or the new country which joined IMF? Now there is 190 country, and the new country joined IMF in 2020. So I am just asking you people that what is the name of new country, new member of IMF? That is Andorra. 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 Okay, so now there is 190 countries, and the headquarter is Washington DC. Okay, and this is that means and each country has the representation in the board of governance. Okay, board of governance, and there is voting rights. Okay, and we will discuss that how this voting right is being fixed on the basis of quota. So we will discuss it that in the in this session itself. So now we are going to proceed further, and we are going to discuss that organizational structure. We are going to discuss the organizational structure of IMF. We are going to discuss the organizational structure of IMF. So what is the organizational structure? IMF is consist of, there is board of governors, and there is executive board, and there is IMF ministerial committees, and there is managing director. Let me tell you, okay, let me tell you that we are discussing the organizational structure of IMF. So that IMF is consist of, okay, there is three, that is they are board of governors, executive board of governors, executive board, and third is ministerial committees. This is the structure. Okay, so that means the top executive of the IMF is known as managing director. Okay, and day-to-day affairs of the IMF is taken care by this executive board. Okay, I am going to repeat once again that day-to-day affair of the administration of IMF is run by this executive board, and this executive board is being elected by the board of governors. In this board of governors, there is all the countries have their representative. All the country have their representative in the board of governors. That means there is 190 countries, so there is going to be 190 members in the board of governors. There is going to be 190 governors, not only 190, rather more. We will discuss. Don't worry. So that means this is going to be, and this board of governor is going to that means elect a executive body. That executive body is known as executive board, and there is 24 members. In the executive board, there are 24 members, and this executive board is being headed by a person known as managing director. Okay, Christina Lagarde. Okay, now this Christina Lagarde is managing director. Okay, so that means So let me tell you that there is board of governors, and all the countries has their representative in the board of governors, and this board of governors appoints or elect the executive board, and this executive board consists of, this executive board has 24 members, and this executive board is headed by a managing director. Okay, managing director. And who is current managing director? Christina Lagarde. Okay, so that is executive. So the day-to-day affairs of the IMF is run by executive board, and this executive board is headed by managing director, and this managing director is elected for 5 years. This elected for 5 years. So the tenure of managing director is 5 years, and that is elected by the executive board. Okay, so that means managing director is elected, and it is elected for 5 years, and who elects? That is executive board. And the executive board is nothing but the executive body of IMF, which runs the day-to-day affairs of IMF, which is responsible for running day-to-day affairs of IMF. That is executive board. Okay, and this executive board is elected by the board of governors, and 5 members are elected. Okay, 5 members. Most, that means there are 24 members. Let me tell you that in the executive board there are 25 members, and these 25 members, out of 25 members, 5 members are appointed. Be very clear, 5 members are appointed, not elected, appointed by permanent members, permanent members of United Nations Security Council. Be very clear that this executive board has 24 members. That is the executive body of IMF, and this 24, out of 24 members, 5 members are appointed, and 19 are elected. Okay, and these 5 members are elected by the permanent members of Security Council, United Nations Security Council. And who are the permanent member? USA is the permanent member, UK, United Kingdom is the permanent member, France is the permanent member, Russia is the permanent member, and China is the permanent member. So there are 5 permanent members of United Nations Security Council, and these 5 permanent members not elect but rather appoint 5 members of executive board, and 19 are elected by the board of governors. 19 are elected by the board of governors, and this board of governor is executive head of this executive board, and they runs the day-to-day affairs of IMF. Okay, so this was about the structure of IMF. Now we are going to proceed further, and we are going to discuss the objectives. So when we talk about what are the objectives of IMF, what IMF want to achieve, when we talk about the objective, we can say that objective of IMF is to promote and improve the global monetary cooperation. The most important, that IMF is the international, that means Institute for International Monetary Cooperation. So that means the primary objective or primary function of IMF, primary function or objective of the IMF is to promote and improve the international monetary cooperation. Second is to secure the financial stability, and how they secure the financial stability we will discuss when we will discuss the functions. Okay, so that means the objective is just to secure the financial stability. How they, that means there should be stability in the exchange rate. As I said in my introductory session, that that means that Great Depression, there was Great Depression because of competitive devaluation of their currency. So that means there is continuous devaluation of their currency by the respective country. That's why Great Depression took place. So that means now they want to, that financial institution, the objective of financial institution or international monetary fund was to have the stability in financial stability. So just to have the stability in the exchange rate. And how they establish the exchange rate stability, we will discuss when we will discuss the functions. Okay. Now next is to facilitate the balanced international trade. Other objective is to facilitate the balanced international trade. Okay. Although that means trade, that means the function trade is being regulated by the World Trade Organization, WTO. But what is the meaning here? To facilitate the balanced international trade, there is something which is known as exchange rate. Okay, exchange rate system. Let me tell you, there is something which is known as exchange rate system. Exchange rate system. So that means there can be this exchange rate system. There is something which is known as convertibility. Convertibility. Convertibility means, what is the meaning of convertibility? That meaning of convertibility is that freedom to convert rupee into dollar, and dollar into rupee. So in case of India, in the transaction of current account transaction, in case of current account transaction for BOP, balance of payment, we already discussed that what is the meaning of balance of payment. In regard to balance of payment, let me tell you that BOP has two parts. BOP is nothing but the systematic record of economic relation of one country with respect to the entire world. Okay, that systematic record of economic interaction of one country with rest of the world is known as that is known as BOP. And for having the systematic record, we that have the current account. BOP has the current account or BOP has the capital account. Okay, capital account. Current account takes into account the that is trade account and service account. Okay, and it includes that EBC, FDI, etc. Okay, this. Okay, so that means when we talk about the convertibility refers to freedom to convert rupee into dollar and dollar into rupee. Okay, that is the meaning of convertibility. But when we talk about the India, that means India has the full convertibility in regard to current account transaction. In regard to current account transaction, India has the full convertibility, but India has the partial convertibility in regard to capital account. In regard to capital account, India has the partial convertibility. Okay, that means we have not allowed. So that means what is the system? Okay, to facilitate the balanced international trade refers to that what is the situation with of the country with respect to the convertibility, whether they have the full convertibility with respect to capital account as well as current account, or they have the partial. Okay, what is their situation? That is, and that IMF want to facilitate or want to promote the full convertibility. That means there should be freedom with respect to current account as well as with respect to capital account. Okay, that is the meaning of. Okay, now we are going to proceed further. And we are going to discuss the. So that means balance international trade, meaning they want to have the idea that what is the, they want to in the future or in the long term, they want to have the full convertibility with respect to BOP transactions. This is the meaning. Okay, that means they want to have the full high employment. And how they want to, because what is going to be, let me, high employment, that what is, that means when they want to have the stability in exchange rate, the meaning is they want to have the economic interaction, or we can say that international monetary cooperation. So when there will be more monetary cooperation at the global level, that is going to increase the production, and when there will be increase in production, that automatically the employment is going to increase. So that means they want to increase the employment rate in the countries. Why? One thing is because by being instrumental for increasing the monetary cooperation, and when there will be monetary cooperation among the countries, definitely the production will increase. Okay, not only this, they also provide the financial assistance. Financial assistance. Financial assistance means when there will be BOP crisis. BOP crisis means, what is the meaning? That you have import and you have the export. Export means the country sold out their product to the foreign country. That is the meaning of export. That means, suppose India export jewelry. Okay, so that means India is going to sold out jewelry to the foreign country. Import means India is going to purchase, like crude oil, we import crude oil. So that means India is going to purchase the crude oil from the foreign country. That is the meaning of import. So that means when our import, please be very clear, and be the case of that means for imports we have to pay in dollar, and through the export we will earn the dollar. It is clear that through for imports we have to pay, we have to settle down the payment in dollars because it is internationally acceptable currency, and while we are making the export we will that means we will get the dollars. So what is the meaning of that, how they are going to financial assistance? That means suppose imports, like our case, our imports are more than our exports. Our imports are more than our exports. So that means we need to have the dollars. And like in before 1991 we have the BOP crisis. BOP crisis, that means what is the case? That we were not having the sufficient dollar to meet our imports. We have only 15 days dollar or forex to meet out our imports. So in that condition the IMF will give you the loan. IMF will give you the loan. So that means that is the meaning of, and why? So that they can that means improve their BOP situation. And when they will improve their BOP situation, that means they will import. When they will import, they will produce. When they will produce, the employment will increase. Okay, so these are the functions of or objectives of IMF. These are the objectives of IMF. Okay, and when they will produce, that means they will promote the economic growth, they will promote the employment, definitely the poverty will reduce automatically. Okay, so they want to reduce the poverty as well. Okay, so let me summarize that what are the objectives of IMF. Okay, so the very first objective is to be instrumental for international cooperation. Okay, international monetary cooperation. Okay, second objective is to facilitate the financial stability by regulating the exchange rate. Third thing, we can say that this facilitate the balanced international trade. And how it that means they meaning is that they want to know that what is the situation with regard to convertibility, with respect to convertibility with different economies. Okay, that is the meaning. Okay, third is they want to ensure that in future there should be full convertibility on BOP transactions. This is the objective of IMF. Okay, and other is they want to promote the high employment, and we discuss. Now we are going to discuss the functions. Okay, when we talk about the functions, please. Priyanka Singh, good morning dear. Very late. So the thing is, now we are going to discuss the functions. So when we talk about the functions, that IMF perform three functions. One is regulatory functions, other is financial functions, other is consultative functions. Okay, IMF perform the three functions. One is regulatory functions, regulatory functions, other is financial functions, other is consultative functions. Okay, what is the meaning of regulatory functions? As I said that it is instrumental for international, okay, monetary cooperation. It is instrumental for international monetary cooperation. So that means what is going to be, so in order to that they have to have the the exchange rate, stability in exchange rate. So stability in exchange rate, for that they perform the code of conduct, they administer the code of conduct, be very clear. So under the regulatory functions they administer the code of conduct. What is the meaning of administering the code of conduct? That means they have the article of agreement. When any party or any country is going to join or going to be member of IMF, they are going to sign an article of agreement with the IMF, and as per that article of agreement, that the IMF administer the code of conduct, and code of conduct in regard to exchange rate policy. As I discussed that earlier, there was devaluation. Why? The Great Depression took place. The Great Depression took place in 1930 because of the competitive devaluation of their currency. So now this cannot be, because if you are the member of the IMF, you cannot do this because it is going to be regulated. Okay, that means time and again the IMF is going to regulate the exchange rate, the policies regarding the exchange rate. Okay, not only this, they will restrict the payment of current account as well. As I said that, okay, that they want to ensure the full capital, full convertibility with respect to BOP transactions. Okay, but it depends upon the economic strength of the country. So in future, or that means in long term, each and every country has to make the full convertibility. Okay, earlier, before the economic reforms, we were having the fixed exchange rate system. But because of IMF conditions only, because IMF bailed out us when we were having the BOP, but they put the condition, and that condition is nothing but articles of agreement. Okay, so what is going to be that they restrict the payment on current account. Under the financial transactions or financial functions, what is going to be that they are going to advise on the transaction, okay, on BOP transactions. Okay, that means there should not be, if there is any BOP crisis, fundamental BOP crisis, be the case of short term or be the case of long term, the IMF is going to advise, not only advise, rather going to regulate the exchange rate. Okay, that is the meaning of financial. Let me tell you that what are going to be financial functions of IMF. Very first is, as I said, that it want to regulate exchange rate for stability. So suppose $1 equal to 80 rupees, and sometimes it becomes to 85 rupees, and sometimes it becomes to suppose 70 rupees. Okay, so that means this is nothing but depreciation, this is nothing but appreciation in the value of rupee. So that means, and it is going to harm the international trade. Okay, so this is under the that financial functions. IMF will ensure that there should be stability. Okay, there should be stability in the exchange rate, and that's why IMF that means recommend for the flexible exchange rate system, not the fixed exchange rate system. Okay, so that is the meaning of other thing. What is the other functions under the financial? That means it want to establish, okay, want to establish multiple system of payment. Be very clear. Okay, under the financial functions only, the IMF want to establish the multiple system of payment. Nowadays, dollar is the international currency. So there is dependence on dollar. There is world dependence on dollar. So this is also the functions. This is also function of IMF to reduce the dependence on dollar. For that, they want to establish the multiple payment system, and for that, okay, they want to, okay, like we have that means the system of currency swap agreement. Currency swap agreement. We have signed the currency swap agreement with different countries. Like we have signed the currency swap agreement with Japan. So that means Japan will accept our currency for the transactions, import and export. Similarly, we will also accept the Japanese currency. Okay, so that means the dependence on US dollar is going to be reduced. That is also the that financial function of IMF to develop or to establish multiple payment system so that the dependence on US dollar can be reduced. Not only this, that means this, there is, when there will be BOP crisis, other function, as I discussed, there is BOP crisis, the IMF will give the financial assistance. Financial assistance. Okay, loan out, bail out to the country which has the BOP crisis. That is the meaning of functions, financial functions. Okay, now when we talk about the consultative functions, what is going to be the consultative functions? That means, as I said, that IMF works as the Institute for the International Monetary Cooperation. So it gives the advices, not only financial advice, but also consultative advice in order to increase the monetary cooperation among different countries. How the different countries can increase the monetary cooperation for each other. In that regard, the IMF gives the advices. It gives the advices, financial advices as well as consultative advice. So this is the functions. So the IMF performs the regulatory functions, IMF performs the financial functions, IMF performs the consultative functions. So there are three functions. So financial that functions are more important because it through that financial functions it regulates the exchange rate system. Not only regulates the exchange rate system, but also when there is BOP crisis or fundamental BOP crisis, it bail out to the countries. Not only this, it establish the convertibility. It try to have the full convertibility for BOP transactions. So these are the functions of IMF. Now we are going to proceed further and we are going to discuss the India and IMF. Why not? Priyanka Singh, you already joined the class, na? Priyanka Singh, you can join the class. What is the issue? So this is, now we are going to discuss about the India and IMF. Okay, India is the founding member of IMF. Be very clear that since 1944 we are the member of IMF. Okay, India. Okay, be very clear that India's finance minister of India is ex officio member of Board of Governance. Okay, we discussed the organizational structure. There was Board of Governance, there was Executive Board, and there was that ministerial committees. Okay, so that means the finance minister of India is ex officio meaning by virtue of being the finance minister of India, that is going to be automatically going to be member of board of governance of IMF. Okay, so the finance minister is ex officio member of board of governance. Not only that, there is also the alternate member. Okay, and the governor of RBI acts as the sir, IMF gives financial assistance to the country. How fund is managed if the country unable to reply? I didn't get you. If country unable to reply, or it is like subsidy. What does it mean? Can you explain it? Ajit, please let me know. What do you mean? Unable to pay, repay, or it is like subsidy. Okay, be very clear, dear, that don't worry, we are going to discuss it, but let me tell you that when it is going to be subsidies, okay, that IMF is going to bail out for the BOP crisis. BOP crisis I talked about, that means BOP crisis is when imports is more than export. Be very clear, import is more than export, okay, like our situation. So that means they have the deficit. Why we do not have the BOP crisis now? Because in our case, our imports are still more than our export. We have the current account deficit. We have the current, as I talk about, that BOP has two parts. Please be very clear. The BOP has two parts. One is current account, I talked about in this class and I discussed when I was discussing BOP. Another is capital account. Capital account. So that means current account takes into the trade account and service account. And this capital account includes the foreign investment, EBC, external commercial borrowings, that is NRI deposits, okay, etc. So that means trade account means trade of goods and services, trade of goods. Trade accounts include the trade of goods, that means import of goods and export of goods. Please be very clear and have the patience. So that means when we have, please try to understand, that means when we have the BOP crisis, when any country has the BOP crisis meaning their imports are more than export. So they need more dollars and they are earning less money. They need more dollars and they are earning less dollars. So they are not able to, okay. So that means in that situation, okay, this is about the current account. That like in India, my dears, like in India, we have the import, our imports, please, our imports are more than export. That means we are importing more, especially goods. When we talk about the goods, our import of goods is more than export of goods. So that means we have the deficit, current account deficit. So that means, but in our case, we have the use surplus. We have use surplus on capital account. That's why we have the BOP surplus. That means in case of current account, be very clear, please let me. In case of current account, we have the deficit, use deficit, we have the deficit. But in case of capital account, we have the use surplus. So overall, our BOP situation is that surplus. We have the BOP surplus. So when there is going to be BOP crisis, there is going to be BOP crisis when we have deficit on current account as well as we have deficit on capital account. That means, Mr. Ajit, please, we are going to, any country is going to have BOP crisis only when there is current account deficit as well as there is capital account deficit. So in that condition, what is going to be, they need more dollars, and they have less dollars. In that condition, IMF is going to give the loan. Okay, so that loan is going to be used for BOP. Okay, BOP crisis. It cannot be used for subsidies. Okay, that means subsidy. If it is subsidy, that is known as fiscal deficit. Okay, that is going to be part of fiscal deficit. Okay, so for that, if there is fiscal deficit, the government can take loan from various sources, borrowings from various sources. Okay, it is not necessary that government has to take borrowings. If there is subsidy, government want to give the subsidy, it is going to increase their fiscal deficit, not de-establish in the BOP. Okay, be very clear that if there is BOP crisis, it is going to de-stabilize the BOP. Okay, that means our imports are more than export. Okay, so we need dollars. Okay, when there is subsidy, amount of subsidy is going to increase, that it signifies that government need to take borrowings. Okay, fiscal deficit of government has increased. Okay, and government can take borrowings, and in that condition, the government can take borrowing from any source. Okay, so this is the situation. So it is not about, okay, and they have to pay. We will discuss that what is going to be scenario. Okay, that is quota system. So quota system, that let me explain. Okay, so this is the thing. I think it is very clear. Is it? Yeah, Ajit Kumar, it is clear. Okay, so now we are, Priyanka saying it does not matter whether you can speak or you cannot speak English. Okay, just thing is, you will be comfortable in the class. Okay, don't worry. Okay, and you can join my Telegram group. Okay, whatever problems will be, I can sort out there. Okay, on the Telegram group, I will entertain even any silly. It is not about silly. Please be very clear. No doubt is silly doubt. Be very clear. Okay, as a aspirant, we have never to bother about what type of our problem is. Okay, what type of our doubt is. We have to satisfy our doubt. Okay, so it does not matter whether you can speak or you cannot speak, you can definitely get it. Okay, whatever I will taught, and if there is any issue, you can join this Telegram ID, you can consult to me on that Telegram ID. Okay, so this is about the IMF. So let me tell you that there is alternate governor as well. Okay, and the governor of RBI is alternate governor of governance, board of governors. Not only this, there is additional governor as well, additional executive director of the country at IMF, and it is Geeta Gopinath. Okay, that means from India there is going to be 3 representatives. Okay, one is ex officio, that is finance minister of India is going to be ex officio member of IMF. Other is alternate governor. Alternate governor is the governor of RBI is alternate governor of IMF. Not only this, there is executive director of country. Okay, respective countries. Okay, that means take care of the business at IMF for the country. That is known as executive director, and Geeta Gopinath is the executive director of India in IMF. Okay, so this is about, and the quota. I will discuss that what is the meaning of quota. Recently, the quota of India has increased to 2.76% from 2.4%. Earlier, the quota of India was 2.4%. Now it is 2.76%. and it is 13,114.4 million. Okay, and India ranks 8 largest quota holder. Okay, 8 largest quota holder. India's quota share is 2.74%, 2.76, okay, sorry, 2.76%, and earlier it was 2.4%. So there is slight increase in the quota of India. And if we talk about in terms of dollar, this is $13,114.4 million of quota we have with the RBI. And in terms of rank, India is the 8th largest quota holder in IMF. So what are the that means ascending or descending order? We can talk about that. What are the other countries that that means the quota? The maximum quota is USA. It has 17%. USA. It has 17% or more, 17 point something. Then it is Japan. Then it is China. Then it is France. Then it is UK. Then it is Italy. Then it is India. India. 8th. This is first, second, third, fourth, fifth, sixth. Sorry, China. After China, let me. Really sorry. It is USA. USA, it is Japan. After Japan, it is China. After China, it is Germany. Okay. After Germany, it is France. After France, it is UK. After UK, it is Italy. And after Italy, it is India. So this is the 8th. Okay. So they may ask you in ascending or descending order, but there is little scope. So this is about the India and IMF. Now we are going to focus on the SDR. Now we are going to focus on SDR. So when we talk about SDR, so let me tell you that in order to get the membership of IMF, that country has to subscribe. Okay, the capital that is known as subscribe capital, and on the basis of that subscribe capital, they got the quota, respective quota in IMF. Okay, that means what is their contribution, what is their, on the basis of their contribution they got the quota in IMF. Okay, and that means on what basis that subscribe capital is decided? It is decided by the executive board, and what they took into care when they decide that what is going to be. Let me tell you, dears, please be very clear about the things. I just want to make things more clear. I am just saying that in order to get the membership, of IMF, the each and every individual has to contribute in the funds of IMF, and that funds are known as subscribe capital. That is known as subscribe capital, and that on the basis of that subscribe capital only, the quota is decided or fixed in IMF. Quota is fixed on in IMF, and this subscribe capital is decided by the executive board. And when the executive board is taking care of the subscribe capital for the membership, it takes into account various aspects. Okay, those various aspect is contribution of GDP of particular GDP in world GDP. That means contribution of respective country in the world GDP. Other is exchange rate. What type of exchange rate system they are using? They are talking about convertibility. What is the scenario in regard to convertibility? That takes into account the various aspects. Okay, most important is the contribution of the country in the world GDP. What is their GDP contribution in the world GDP? Not only this, they also take account the exchange rate, that what type of exchange rate they are following, and not only this, they also take into account the convertibility scenario. Okay, so by taking all these aspects into account, they fix the subscribed capital. Be very clear about the things. They fix the subscribed capital, and on that basis of this subscribed capital, they got the quota. They got the quota in IMF, and once they got the quota, that means they became the member of IMF. Okay, they become the members of IMF. Any country becomes the member of IMF by having the subscribed capital. Aarti saying too much late, dear, too much late. It should not be. Good morning. That by becoming member of IMF, okay, they are entitled to get certain facility. Okay, and that facility is they are entitled to get the loan. Okay, not only this, they are entitled to get the quota. And whenever any reform is going to be in IMF, that is being decided by, like, if we want to reform the executive board, if we want to have any reform in executive board, that reform can only take place if it is 70% country. Okay, there is 70% quota requirement. In order to have the reform in the executive board, there is need to that 70% quota should be in favor. Only then the reform can be done in the executive board. Like I talk about that 5 members are not elected, they are appointed. So when we want to have that these 5 members should not be appointed, they should be elected. That means to have this reform, there is need to have the 70% quota in favor. So they got the quota on the basis of their subscribed capital only. So it has the significance, and that means 40% quota is with the G7 countries. So that means any reform in executive board can take place only when these G7, great 7 countries have the consensus. Similarly, if they want to have the reform in quota system, okay, that quota system, okay, now after the subprime crisis of 2008, the developing countries, that they have altogether emerged so economic power, like India, like China, like Brazil, BRICS country, somewhat extent Russia as well. That is not good as in terms of economic terms, but they are still good in comparison to Europe. So that means they are going to get, that means the reform in quota system, and this quota system is going to only when there is 80% vote in the in regard to reform. If 80% quota holders agree to have the reform, then only, and in that 80%, the 70% is only held by the USA. So that means that in quota system, any reform can take place only when the US has the consensus. This is the meaning. That's why quota has a significant say. Okay, so by being the member, please, by being the member of IMF, you got the 3 or 4 facility. One is loan facility, other is quota, your quota is fixed, that is voting share. Third is you are entitled to get the SDR. What is the meaning of SDR? And you are also entitled for reserve tranche. Okay, that will be more technical. We will discuss when we will discuss the BOP, okay, in the class. So that means loan. That means whatever the countries are entitled. Please, Ajit, now your question is going to be satisfied. Please be very clear. Okay, be very clear that how the loan is going to be. Okay, how IMF gives the loan if they are not able to repay. What is going to be the scenario? Now your question is going to be satisfied. So they are entitled to. That means IMF will give the loan, okay, to the countries which has the BOP crisis. The country which has the BOP crisis, the IMF will help those countries, and they will give the 200% of their subscribed capital annually, and 600% total. That means suppose I contributed 100 rupees in IMF, I am entitled to get 600 rupees. 600 rupees totally. That means 6 times of my subscribed capital. The 6 time of the subscribed capital of the country, and that 6 time is going to be 200 times annually. That means I can avail the loan facility. That means I can take borrowings 200 rupees in 2023 or 24, 200 rupees in 25, 200 rupees in 2016. After 2016, I am not entitled to get loan from IMF until I am not going to repay it. That means your maximum quota is 600% of your subscribed capital and 200% annually. So continuously for 3 years, if you fulfill your quota, you are not going to get any loan. If you are not going to pay, you, in order to get loan further, you have to pay. Then only you will get the loan. Ajit, is it clear now? Okay, so that means loan amount 200% annually and 600% totally. And in order to get further loan, they have to pay the earlier loan. So this is the scenario. This is the scenario for loan. Now quota, we discussed the quota. Now SDR. What is the meaning of SDR? Let me, okay, that SDR, they are entitled to get the SDR. SDR is not a currency. Be very clear. SDR is not a currency. Let me. SDR is not a currency. It is IMF unit of account, not a currency. Be very clear. What is the meaning of unit of account? What is the meaning of a unit of account? And I will discuss, don't worry, okay? So that means, SDR is being maintained in the form of US dollar. That means countries can maintain SDR in the form of US dollar, euro, Japanese yen, pound sterling, and Chinese renminbi. Okay, and this was included in 2016 only. What is the meaning of, okay? So what is the meaning of it? My dear, as I said that we joined the IMF not in 1990. We are the member of IMF since the inception of IMF. First fact is, this must be corrected. Second is, they pay subscribed capital according to GDP. Okay, it is not only GDP. They take into various aspects. GDP is the most important. Okay, GDP is the most important. Okay, but the thing is, GDP is most important. Undoubtedly, our contribution, our GDP contribution in world economy has increased. Undoubtedly, we are the 5th largest economy in PPP terms. Okay, that's why we are asking for reforms. That's why we are that big countries or developing countries were asking for reform, and that's why just to satisfy we people, they did some little reforms. Okay, because this scenario, this the Kostra system is not representing the real picture, current real picture. That means that quota was fixed in 1944. Okay, now the situation is altogether different. Okay, China is the largest country, largest GDP in terms of PPP, but they have only 6 point something quota, whereas US has 17%, and that reform can only be, as I said, that reform can only be when that means 80%. So that means reform cannot be until US do not have the consensus, and any country can have the consensus if who is going to lose the quota? G7 countries, USA. They are going to lose that means quota. That means European Union, country of European Union, and USA is going to lose the quota. That means maximum can be 100%, na? And if it is going to be on the basis of GDP, that means who is going to lose? USA and European Union countries. So can they allow it? That's why reform is not taking place. Although they did the reform, but it is not significant enough that our quota has increased. Okay, it was 2.4%, but now it is 2.76%. Similarly, China's has also increased, but it is not the representative of the current financial strength of the BRICS country or financial conditions of developing country. Although it should be, but it can only be when they allow it and USA is not ready to allow it. That is known as hegemony. Okay, in the world politics there is something which is known as hegemony, and US has the financial hegemony. Is it clear, Ajit? Is it clear? Not on same subscribe capital, that we are regularly making the subscription, na? Okay, that means we borrowed from IMF when we were having the BOP crisis in 1991, and that's why we went for the economic reform. Okay, that was not intentional. That means intentional. That means we did not do the economic reforms intentionally. Rather, it was regulation under the Washington Consensus of IMF and World Bank. That's why we went for the reform. Okay, and we took the loans from IMF, but we paid it in 2000. We paid it completely 2000. Now we are contributor to IMF. We are not the country who is taking loan from IMF. We are contributing to the IMF nowadays. Similarly, Japan, after the Second World War, there was devastating effect on Japan because of atomic war. Okay, and IMF took the loan from IMF. Japan took the loan from IMF. But now Japan is the second biggest contributor to IMF. That's why it is second rank holder in the quota system. Okay, so this is about the, now when we talk about the that means, let me tell you that in what manner this IMF that is being quota SDR is being fixed. SDR, as I said, that it can be US dollar, it can be pound sterling, it can be euro, and it can be yen, Japanese yen, and Chinese renminbi. Suppose we want to have the 100 as a SDR. So that means, suppose 50 rupees, 50 we are maintaining in the form of dollar, and 15 we are maintaining in terms of pound. Okay, and suppose 35 or that is 20 we are maintaining in the pound and the sterling, and 20 we are maintaining in the euro. Okay, so how much it is going to be? 20, and 5 we are maintaining in euro yen, and 5 we are maintaining in. Okay, so like we can maintain SDR in 5 currencies. Okay, that means SDR can be maintained in 5 currency. That is, it can be maintained in the form of US dollar, it can be maintained in the form of pound sterling, it can be maintained in the form of euro, it can be maintained in yen, it can be maintained in Chinese currency, that is renminbi. Okay, so that means, suppose India has 100 SDR. So what is going to be that, how it is can be exchanged? I just want to discuss that. Suppose 50 rupees or 50 SDR we have maintained in dollar, 20 we have maintained in pound sterling, 20 we have maintained in euro, 5 we have maintained in yen, and 5 we have maintained in Chinese currency. So that is going to be, that means this when we are going to maintain 20 in pound sterling, there should be any exchange rate of pound with respect to dollar. Similarly, there will be any exchange rate with euro with respect to dollar. Similarly, there will be exchange rate of yen with respect to dollar. Similarly, there will be exchange rate of Chinese currency with respect to dollar. So we are going to calculate 100 SDR value in terms of dollar, and we can exchange that with the countries if we need to have the requirement. We need to have the requirement. That is the meaning. Okay, that is the meaning, and that is the scenario. Okay, so this SDR is represent, this should be very clear that this is not currency. Okay, and we discussed that what is SDR. SDR is special drawing rights, international reserve assets. Okay, now we are going to focus on how the that SDR allocation. Okay, suppose allocation of SDR. Okay, we talk about that SDR is allocated on the basis of quota. So our quota is 2.76%. So our SDR is 2.76%. So and combinedly, if we talk about that is $13,114.4 million. So that means suppose IMF gives the SDR to country A. Okay, that may be any country, and that country trades with SDR with currency. Okay, so that means A country has the SDR. So A country is going to transfer the SDR to country B, and they are going to take the that may be euro, that may be yen, that may be pound sterling, that may be dollar, or that may be Chinese currency. Okay, so that means this is going to be, these currencies are going to be transferred to A, and the SDR is going to be transferred to country B. Now suppose country A want to import the vaccine. Okay, vaccine. So country A is going to transfer these currencies with that country who is going to transfer the vaccine, and that vaccine is going to be transferred to country A. In that respect, that whole SDR is being used as a for the medium of exchange, for the medium of exchange. So the although SDR is not a currency, but it can be used as a medium of exchange, and we discussed that how SDR can be used as medium of exchange. And today we finish here only. If there is any doubt, let me know, because we do not have time. We already that means extended our time. So if there is any doubt, you can join my Telegram ID and you can connect with me. Okay, today we finish here. Is there any doubt? Can we stop here? We stop here.